Welcome back. Today we're talking to Jack Lowenstein from Morphic Asset Management about their performance in May 2015. Welcome, Jack. Firstly, how did you go in May?
It was a pretty good month. We were up about 4% in absolute terms. I think we outperformed the market by somewhere between 0.5% and 1%.
After such a good month in May, what do you see as the major risks going forward for the rest of winter?
I think there's really three big risks. One is Greece, disorderly exit of Greece from the euro. The second is the high volatility we see in China, particularly towards the end of the month. And the third is jitters in the US ahead of what we see as likely interest rate rises in September.
And what do you think is going to happen to Greece?
Look, I think we need to be clear. Greece has nothing to do with economics or finance. It's all about the politics. Do the Europeans want to have Greece that's outside their orbit, if you like, possibly influenced by Russia? And do the Greeks themselves want to feel they've left the fold? We think that neither of them want that to happen, but there's a real danger of an accident. So we've cut our exposure to Europe a bit, and we bought a few hedges, chiefly through puts on European bank stocks.
Jack, just turning to China, how do you interpret the late sell-off in May in the Chinese market?
It's been a very strong run-up. This is probably just a bull market correction. There's a lot of different views about what's happening in China. My colleagues Chad and Jeff have just got back from a trip there. Their main impression about the trend of the market is the increased interest of foreign investors who are still very underweight China, and I think that's probably enough to keep the bull market going a bit longer, particularly for the Hong Kong listed shares, which are still easy to access for foreign investors. I'm sure at a big discount to the same shares in China.
Jack, just turning to the US interest rate question, should we be worried about that, and when do you think it's going to happen?
Well, I think the inevitable will happen in September. Practically, that's the last time at which the Fed can raise rates this year, because it's very hard to do so in December because of domestic monetary policy or domestic money market issues. We think the Fed wants to raise rates, but we don't think it's going to be devastating for the stock markets. In fact, we think there'll be a relief rally once it happens, because interest rates are going to go to very low levels compared to historical periods. They're going to rise very slowly.
Is anything else sparking your attention right at the moment?
I just got back from a trip to Japan. Japan has been a graveyard of dreams for those expecting an improvement in corporate governance, but this time I think it's real. It's going to take place in a background of improving economy, improving earnings revisions for Japanese companies going to beat their guidance. So we're very bullish. It's not an expensive market. I think things are going to do well there.
Jack, thank you for your time. We'll look forward to seeing you again next month.
Thank you very much, Chris.